Welcome back to Common Sense Investing, where we simplify complex investing ideas so you can make smarter decisions. Today, we're diving into venture capital, how the world's top investors spot startups with massive potential, how to think differently about risk, and the lessons you can apply to your own portfolio. Venture capital isn't just for the ultra-wealthy or Silicon Valley insiders. By understanding how professionals evaluate startups, you'll gain insights into spotting opportunities before they become mainstream and protecting yourself from the big mistakes that most people make. Think like a venture capitalist, spotting opportunity before others. The first lesson from venture capital is learning how to spot opportunity before the market recognizes it. VC investors excel at identifying founders solving real problems with innovative solutions. They don't just invest in ideas, they invest in execution, vision, and potential to scale. For example, the most successful startups often start in niches that seem small or uninteresting at first. But by examining customer behavior, market gaps, and emerging trends, VCs see where the market is headed, not just where it is today. As an individual investor, you can apply this by observing trends in your everyday life, paying attention to products you love, services that are gaining traction, or industries that feel like they are on the verge of disruption. You don't need to invest millions like a VC, but understanding where the smart money goes can give you a huge edge in spotting growth before everyone else. Embrace risk, but manage it strategically. Venture capital is inherently risky. Most startups fail, and losing money is part of the game. But what separates successful investors from the rest is strategic risk management. VCs mitigate risk by diversifying their portfolios, analyzing the quality of the founder team, and understanding the market potential. They are comfortable losing on some investments because they know that the big winners will more than offset the losses. You can apply this in your personal investing strategy by thinking about risk differently. Instead of avoiding risk entirely, identify asymmetric opportunities, investments where the potential upside far outweighs the downside. This could be emerging industries, small-cap stocks, or early-stage companies with clear growth potential. The key is not reckless gambling but disciplined risk allocation and thorough due diligence. Think in scenarios, the power of second-order thinking. Another critical venture capital lesson is thinking in scenarios rather than absolutes. VCs constantly ask, what happens if this startup succeeds beyond expectations, or what happens if it fails entirely? They assess the ripple effects and contingencies. This second-order thinking allows them to anticipate market reactions, competitive responses, and potential challenges. As a retail investor, applying second-order thinking means not just asking if a stock or sector is growing, but also considering what will happen when everyone else realizes the growth story, how competitors will react, and how economic cycles might influence outcomes. Thinking beyond the obvious first-order outcome gives you a clearer picture of risk, reward, and timing. Patience and compounding, the long game. Finally, venture capital teaches the power of patience. Even when a startup is a winner, growth takes time. VCs know that compounding success requires waiting for execution to materialize. For your investments, this means avoiding the temptation to chase quick gains or react to every market fluctuation. Focus on high-quality companies, sectors with long-term growth potential, and opportunities that will compound value over years or decades. Patience is one of the biggest differentiators between investors who build lasting wealth and those who chase short-term trends. If you want to get smarter about spotting high-growth opportunities, managing risk, and thinking like the pros, hit that subscribe button and join our community of investors who focus on long-term success. Comment below which venture capital lesson resonated with you the most, and I'll make a follow-up video diving into practical examples you can start using this week. Don't just watch, invest with intention and apply these lessons to grow your financial future the smart way.